we're going to be invincible and we're going to be young forever. But inevitably, everybody's going to get old. Everybody's going to want to stop working, go on more holidays, sit with your feet up and drink wine or whatever you want to do. But we say if something did happen to you, if you were to pass away, or if you were to become unable to work due to accident or sickness, I think it's really important to just sit down and have those awkward conversations. And if you didn't want to talk to it with your loved ones, because it is quite a sensitive subject, we just see if your family ultimately is looked after. This is really important when there's a young family and there's maybe one breadwinner. If the family are solely dependent on the breadwinner to pay the bills.
Today's masterclass is on Make Your Money Matter. Our guest today is my dear friend, Cara Clare, a life planner and financial advisor. Welcome, Cara.
Hi, everyone. Thanks, Anita, for having me. My first podcast, so bear with me, but really excited for today. Anita and I have spoken a few times, so yeah, we're really keen for today, and I've been looking forward to it.
Thank you, Clara, for being here today. So, what did take you on your journey of a financial advisor? Is this something you felt you needed for yourself, or is this something you saw a need for? Because let's face it, everybody needs financial help.
For a lot of years, I was sort of behind the scenes. So I'd say I sort of started my career journey in the City of London. I started off doing all the administrative help, writing a lot of the technical reports, and slowly I sort of worked my way up. And yeah, it was, I like to tell this story to people because it's completely my why of why I'm sort of in my position, and I feel really grateful that I'm lucky to say I enjoy my job. But basically, during lockdown, my husband and I were trying to get married, and obviously everyone's plans sort of went to pot. And I was busy helping clients invest their money. And I said to my husband, I said, why don't we invest our money? Like, we don't know when we're going to get married. Maybe we can, grow our pot and, do something a bit nicer when things are a bit easier. So, I invested our whole pot. Slightly naively, I went quite high risk. But yeah, it paid off. So it made 20% in 1 year, and we enjoyed a lovely honeymoon in Bali, courtesy of our £2,000 growth. And then that was almost sort of like the light bulb moment. I always used to think that investing is so difficult. You need to have a minimum amount, you need to have a certain amount of knowledge. I think the perception of saying, just the word financial advisor just seems so upright and fancy, and people tend to think I don't know enough to be able to speak to someone, where I thought all my family, or a lot of my family and friends, could benefit from what we managed to do with our little wedding pot. And then I took some time out. I finished all my exams, and it's my mission to make money easy, to just talk people through the basics of it. I'm an absolute advocate for ladies and women to know what's going on in their family's finances. I want to get people away from, my husband deals with it, or my boyfriend knows what's going on. I'm just an advocate, and it's my mission to just educate people and just to be confident with money ultimately, because it's such a taboo thing. People don't. I read a quote actually that ladies are more likely to talk about bedroom matters with their girlfriends than money. And it shouldn't be like that. Like, everything determines when you retire, what holidays you go on, planning for your children's future. So yeah, sorry, rambled on there a bit.
No, that's okay. It's good to hear.
I think there's definitely maybe a lack of representation for like female advisors. I think also when you think financial advisor, you tend to think older white man, and Also, Financial Times wrote a really big article on a few months ago about females are also more inclined to maybe speak to another female advisor and open up a
Hmm.
bit more, especially on something a bit more sensitive, evidently as your money. So yeah, I'm just
Hmm.
passionate to help as many
Yeah.
people as I can.
Yes, definitely. And that's actually needed so much. And I can totally understand. And it's good to have more women in the business. Definitely. So, your role as a financial advisor, what actually does that entail?
Oh, okay. Anita, that's a really good question. I like to say that I wear three hats when I meet people for the
Hmm.
first time. So, my first hat would be a life planner. So, Anita, if me and you had a conversation over a nice cup of coffee, very informal, laid back conversation with my financial planning planner hat, or my life planner hat, sorry.
Hmm.
Um, we would talk about all your goals. We talk about if we talk about retirement, what do you like to do in retirement? What's important to you? Do you have children? Are there plans to go to university? Have they already gone to university? Would you like to help them with
Hmm.
a house deposit? Would you like to be in a position where you've paid off your mortgage at a certain age to buy, I don't know, a boat or someone recently wanted to buy one of those long boats, the ones you go on barging trips with.
Hmm.
So that was just something that he'd always wanted to do, and it was his plan at 60 to buy this and to visit all the kids along the channel. And then after that, I would wear my second hat. So that would be my financial planner hat. So
Hmm.
from life planner to financial planner, I will ask you a little bit more in depth about what financial plans you have in place. So do you have savings earmarked? Are you saving maybe on a regular basis if that's a possible, if there's scope? Is there scope to sort of increase that? Are you saving in terms of whatever's left at the end of the month? Yeah, push that into a savings account, or you say, I've looked at my finances. I can afford to maybe save £50 a month. And then at the beginning, at payday, you take that £50 and it's almost like you take it before you can spend it. Yeah, and then we look
Hmm.
at if you're invested into pensions, we see where they're invested. We look at how it's performed, if we can jig things around, maybe, higher exposure here or there and see how much everything's charged. We can forecast, and then I'll wear my last hat, my financial advising hat. So, with all the knowledge that I've built up and experience over the years, I will formulate a recommendation. And this is
Hmm.
just an outline to say this is where you would like to be, this is where you are. I feel that this is a really affordable, viable plan to get you to sort of tick off as many things on your bucket list as possible. Um, Up until this point, our conversations are on a no obligation, no fee basis. And then, yeah, that just takes it back to what you mentioned before. I just feel like financial advice, no prior knowledge really needed. You need to know what your goals are, but
Hmm.
people tend to have a good understanding of that. And then what you have in place, and then yeah, take things from there.
That's brilliant. Lots of information there, definitely. About investment planning, where do we go at the moment with the inflation at a high? I mean, there's so much in the news. Everything's everyone's like in this scarcity situation. So what's actually happening about investing?
Yeah, big things there. Cost of living crisis.
Hmm.
So that ties straight into inflation. So inflation is just the general increase of costs and services. So that just ultimately means if you were in London 20 years ago and you bought a beer, you could probably buy it for a pint for £3. Today, you could probably be lucky if you got half a pint for 3 years. So things just, yeah, get more expensive. Ultimately, your what we call real income. So your
Hmm.
income, if it stayed the same, you're able to buy less. So you ultimately your income decreases because the value. So what we need to do is we need to look at our money and we need to look at our income. So first off, if our salary increased with inflation, and I know that's on the news a lot, that means that your
Hmm.
buying power will stay the same. So effectively, if you then just did nothing, you'd be all right. You'd be sweet. I think you're very fortunate if you've had such a big pay rise, but most of us
Mhm.
aren't. So then we need to look at what can we do, what can we uh, change, what can we adapt to sort of be able to still go on the same holidays. I don't know, buy new trainers every year or whatever you want to do. So this is when we look at investing. So again, people feel that maybe through a lack of understanding or knowledge, they just feel, no, I don't know what's going on. I am just
Mhm.
comfortable keeping my money under the mattress. I know how much is under the mattress. I know if I need it, it's there. But we know that if there's maybe £500, it will effectively become less even by not doing anything. So, what
Mhm.
I would urge and recommend people to do is to look at investment opportunities. And by this, I don't mean that if all your savings is under the mattress and say it's £1,000, to now speak to someone and invest the full £1,000, because we always need to think about something called an emergency fund. I mean, ideally, and this is a very big ideal, I encourage clients to write down all their monthly expenditure and really take note. Maybe just print out a piece of paper and say, I've spent this much on food this week, next week, this much goes on bills. And if you times that monthly amount by three, that is sort of an ideal gold standard of emergency pot. And then everything
Mhm.
above that, I would look to sort of move that into investment that would give you a higher rate of return. So say we got 11% on your cash. It's a hell of a lot better than it being under the mattress or even in the bank. So the bank, interest is very low at the moment. But there
Mhm.
are options in the bank also to fix your money in. The bank says if I can have that £1,000 and you can keep it in the bank with me for 3 years, they will
Mhm.
guarantee you an interest rate, and that is normally higher than just keeping it in a current account. So there's definitely different options. If you know that you've got a very stable emergency fund, you haven't got the extra money earmarked for anything right now. It's definitely wise to look at that. I know Virgin Money have got a really good one at the moment. But
Mhm.
yeah, I encourage whoever you bank with at the moment, walk in and say, I'm looking to fix up some savings into a fixed interest. What are my options? And yeah, hear what they say.
So, talking about retirement plans, pensions, do we need to start thinking about them now? Are they important to start thinking now rather than wait?
I think younger people, and I'm probably,
Mhm.
although I'm not that young, but I, 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 I sort of feel the same way. We don't feel like we're going to get old. We just think we're going to be
Mhm.
invincible and we're going to be young forever. But inevitably, everybody's going to get old. Everybody's going to want to stop working, go on more holidays, sit with your feet up and drink wine or whatever you want to do. And with things like this, there's a catch because obviously pensions is money that's invested, almost like your investment planning, but it's tied up until your retirement age.
Mhm.
So at the moment, it's 55, and it's due to increase to 57 in 2028. But so the government have said if you promise that you would save for your retirement, because not a lot of people do, they're able to give you a bit of an uplift. So
Mhm.
if you put in £100 into your pension, the government automatically boosts that up by £20. So actually, £120 gets invested. So what this means is this is invested into a pot. You probably won't see it for quite a few years,
Mhm.
but you really benefit from something called compound interest. This is just effectively you get growth on your growth, and I always use the metaphor as a snowball. So say you have a small snowball and you start rolling it. It takes longer to get it bigger, but
Mhm.
as the bigger the snowball gets, the surface area increases and it collects more snow at a quicker rate. So when you
Yes.
already have a bigger ball, then that just doubles and gets bigger and bigger. So that is effectively compound interest. But so yeah, is it important? Do you need to think about it now? 100%, because if you can,
Mm.
the sooner you get the smaller snowball rolling in the background, it will roll and roll, and then it's easier to get you where you want to be when you're older, and you are at that
Mm.
point where you want to slow down than starting your snowball at a later date.
Yeah, that's fantastic. And I can totally understand why everyone needs to get on that as soon as, really. What happens to my pension if I die? Does the government take it?
Yeah, that's a really good question, Anita, and it's something I actually get asked quite often. No,
Hmm.
short answer is no. There are different types of
Okay.
pensions, granted, but the majority of pensions, referred to as money purchase, these are normally the workplace pensions that people are enrolled to recently, or no. So if something happened to you, 100% of your pension would be passed on to your spouse or your children, and if your pot's so big, Anita, that they can't spend it, then it goes to the grandkids, and it's a really good, way to pass on a legacy. When
Hmm.
when people pass away, they can be liable to inheritance tax. So this is where we add up
Hmm.
all your assets, and if it's above a certain amount, a certain level, whatever's above that is taxed at 40%. You work hard, you work your life to sort of build up a nice standard of living for yourself, and ideally you'd like your loved ones to benefit from your hard work and think,
Yes.
grandma got me this or grandma's left me money. We all sort of want that for our kids, and one
Hmm.
way to sort of move things around is through the pension. So your pension isn't considered part of the calculation for the 40%. So putting money into your pension, great, you get that extra 20% uplift. You're starting to get your ball rolling, and if something happens, you know that that pot is left for your loved ones, and the government can't take inheritance tax on that.
That's brilliant. So, me being self employed, how does that affect me and my pension?
So the second that I would ask if it was based on, are you working as a sole trader or as a limited company? For instance, if it was through a limited company, you can actually deduct your pensions as an expense. So then that would also decrease
Hmm.
your tax. So so yeah, it's very tax efficient.
Protection planning, what is protection?
Okay, so we've covered investment planning, retirement planning, and then the last sort of big umbrella that I help clients with is protection planning. So this is just, we look at your scenario and we say, obviously, Anita, we don't want anything to happen to you. We want you to live until you're 100, and I don't know how old you'd want to live for. But we say if something did happen to you, if you were to pass away, or if you were to become unable to work due to accident or sickness, we just, I
Hmm.
think it's really important to just sit down and have those awkward conversations. And if you didn't want to talk to
Hmm.
it with your loved ones because it is quite a sensitive subject, have a chat with me. We talk about option A, plan B, option two, plan C, and we just see if your family ultimately is looked after. This is really important when there's a young family, and there's maybe one breadwinner.
Hmm.
And if the family are solely dependent on the breadwinner to pay the bills, there's just plans out there to make sure that if mum or dad were unable to work, that
Mm.
dad would or mum can concentrate on getting better without having the added stress of being worrying about bills and thinking how are we going to
Mhm.
pay for food and things like that. So yeah, we have something called life insurance, which I think most people know about. So if you were to pass away,
Mhm.
you would get a big lump sum. This is normally connected to your mortgage, so people like to have this. So if, for instance, if my husband passed away, we'd be able to pay off the mortgage. So I wouldn't have to move house, for instance. So that's sort of a reassurance. There's something called family income benefit. If we had a young child that maybe wants to go to university, so say
Mhm.
she'll be financially independent or financially dependent, sorry, until age 23, there's plans in place where I could cover my income for the next, if the baby was newborn, for the next 23 years, so that my child will have the same opportunities in life if I was around or if I was no longer here. So then
Mhm.
dad, who's ever, or sister or auntie, uncles, my income without me being here would be paid every month tax free, and that money can be saved up. It can go towards a car when she's 18 or he's 18. It can go to school fees or
Mhm.
university fees, and There's just options. For instance, I use this example. A friend of mine was 30. She had a newborn, so we worked till the baby was 23 years old. Yeah, it was her income, and
Hmm.
it was £15 a month. So having that reassurance for £15, that's maybe like 3 coffees a week. So
Yes.
she knows that if anything happened to her, her baby would be looked after, would have the same opportunities. And again, it's that legacy. If you've maybe not built up that pot, if sort of
Hmm.
making sure that your loved ones will look after. Then we have income and income protection. So you haven't passed away, but you've become ill enough to not be able to work.
Hmm.
The highest claim reasons for people claim for income insurance is back pain and depression. So then you can concentrate on getting better, and your income will be paid out by the insurers tax free every month to help cover those bills. And then lastly, we have critical illness cover, so where your income will be covered on a monthly basis due to accident or sickness. Critical illness is a lump sum that gets paid out. So insurers have a list of critical illnesses. So, say for instance, having a heart attack and
Yes.
having a stroke, or getting
Hmm.
cancer is on the
Yeah.
list.
Yes.
Doesn't matter if you can
Yes.
have a heart attack and go back to work tomorrow. If it's on that list, a lump sum will be paid out. So that works slightly differently to income insurance, where if I'm unable to work, income insurance will pay out. So for instance, if I'm a plasterer and I break
Yes.
both my arms, that's not
Hmm.
necessarily a critical illness, but I'm
Hmm.
unable to work. So if I had an income protection plan, that would pay out till my arms healed or whatever. And
Yeah.
if that sort of does that make sense?
Yeah.
So there's lots of
Definitely.
different plans for different scenarios. So it's really good to just again sit down with someone and say, "This is my scenario. What's the best I can do?" Ideally, people would want to be covered for everything, like most insurance. But it's identifying what's what's the biggest need, and what would be the most beneficial for my family if something happened.
Mm, absolutely. Other things to consider: updating wills. I mean, some people don't even think about doing their will, but it's so important, isn't it? So, what other things are there to consider?
Oh, 100%. Wills isn't something that I deal with personally, but it's a question I ask every single client. I think it's really important. First off, it does avoid a lot of family feuds, which is not what you want.
Yes.
But also, it just grants your wishes, and you know that where you'd like your assets to be distributed is sort of someone honors that when you're no longer around. We use a document that
Hmm.
is actually free of charge. I know solicitors can charge up to £2,000 for this, but it's something called My Documents, and it's just a couple of pages, and it's just somewhere to record all your plan numbers, your login. We spoke about pensions, so if you had a few pensions, to write down
Hmm.
what the plan number is. I know we get these statements through the post, and normally we just throw these away, to make sure that if something happened to you, that your loved ones know exactly where everything is. A lot of our stuff's
Hmm.
online at the moment,
Yes.
which is great because you're saving the environment and you're saving the paper, but no one knows your login. So much unclaimed assets, called the unclaimed register. Just lots and
Hmm.
lots of money that's just not being claimed because people don't know where everything is. So if you start up, for instance, one of those fixed interest savings accounts with your bank, just write down, I've got this is where it's worth, this is the contact number, I've got a pension with St James's Place, this is my plan number, call Cara if something happens, I know how it works, my daughter knows to call Cara and she will sort it out to help with funeral costs, or it's something that you've worked hard for, and it would just be a shame if the right people didn't benefit from your hard work.
Absolutely. And I think it is so important, especially as you say, everything's online, login details. And yeah, that's something I've considered as well. And that's good to know your company do it for free. So that's brilliant. Thank you for that. So you've given us a lot of tips, a lot of advice. What are your 3 key takeaways?
Yes, so I'll say number one is working towards that emergency fund. I know things are slightly tighter than usual at the moment. Everything is getting more expensive, but just I would just highly recommend and encourage to sort of be conscious of an emergency fund. As you know, Anita, the day the boiler breaks is the
Mhm.
same day the car breaks down, I don't know, the kids get
Yes.
sick, or so to just be mindful that maybe not have that extra coffee and put that extra £3 in the emergency pot and just have that reassurance, because yeah, it's just it can lead up to a lot of stress, and relieve maybe a bit of stress if you know that if something does happen
Mm,
that you are sort of covered. Second point I would say is, as I touched on before, if you start a new job and they send you that email saying you've been enrolled into Nest or into People's Pension or whatever, and it is a regulation now that your employer, if you are full-time employed, that your employer should pay into a pension for you. Definitely don't opt out. It's almost free money. But I would print out that email, make a folder, and just
mhm,
have that. The plan number is really important. Your national insurance number, and then most of all, a lot of the time people move around a lot, so to be able to then get
mhm.
your information. So if I see this when I try and track down pensions for clients, I don't have their address because I don't know where they were when they had that job. They don't have the plan number. So I would just, as soon as you get that email, print it out, put it in a folder, label the folder pensions, and just put it under the bed. That will really help you out later. And then your third point, I probably have to tie this to protection planning, but I would just say
Okay.
to just sit down when you next have a coffee and just think, especially if you have little ones, to just think, are they looked after? And I mean, if mom and dad is your
Mm,
plan B, and again, a really viable option, have you had the conversation with mom and
mhm.
dad? Is mom and dad willing to take it on, to know and to have reassurance, to just be part of that whole financial wellness, that you can sleep at night, because there's so many other things to stress about.
So where can the listeners get hold of you, find you online, Cara?
Yeah, so like I mentioned, my first meetings are on a no obligation, no fee basis. Yeah, so my email is Cara, Cara dot Clare, Clare at sjpp.co.uk. I'm also on Instagram, Make Money Matter, hence the title of this masterclass. So yeah, drop me an email, send me a DM on Instagram, and we can go for a coffee chat.
Definitely, thank you. And what I'll do is put all the details in the show notes so anybody can directly get in touch with you. Thank you for sharing your deep, insightful wisdom and knowledge with us today, Cara Clare.
Thanks for having me. It's been really fun.
Thank you. So, Cara, I ask all my guests these last 2 questions. What is one of the most courageous things that you have done? Because we are all about Create the Courage to Be Fearless podcast here.
I would say go for your dreams. If there's something that you've always wanted to do, just be brave. We have a quote in the office: "Be brave quicker." So I would just say, be
Hmm.
courageous, be brave. I've always wanted to be a financial advisor. I've always thought there's so much to know, but yeah, I'm passionate about helping people, and I think that really shows when I speak to people, speak to clients, and if
Yes,
there is anything I'm unsure of, there's always someone to call to get a second opinion. So I would say be brave. If there's something that you always wanted to do, go out there and get it. Life's too short.
excellent. So, what's your definition of courage?
That's a tricky one. Um, I'd probably say it's something that you're a bit scared of. You're a bit scared to sort of tackle, but yeah, I feel like if you aren't courageous and you don't step out your comfort zone, then you can't grow, and you always tend to find more pleasure in the things that you're a bit scared to do. And if you can accomplish that and be courageous, I think that has more of a payoff.